welcome to the Deep Dive. Today we're tackling UNBANKED. It's a company that's recently rebranded and making some, well, interesting moves.
That's right.
We've got a detailed investment analysis report here, and our mission really is to dig into what this report tells us about their prospects.
Yeah, are they actually heading for significant growth? Is the foundation stable?
Exactly.
Mhm.
And ultimately, should you, if you're looking to invest, be paying attention?
Precisely. We're not just going to, read off the numbers. We need to figure out what's behind them, what are the potential hurdles, and what does it all mean for unbanked as maybe an investment?
Okay, so let's start with the bottom line, profitability and growth.
Mm-hmm.
The report points to a really quite striking turnaround.
It really is.
They went from, what, a 369 million yen loss in the fiscal year ending March 2023 to projecting a 391 million yen profit for the year ending March 2024,
Mm-hmm.
and then another 237 million yen profit forecast for the year after that, March 2025.
And the sales growth alongside that is pretty dramatic too.
Yeah, nearly doubling projected in that same time frame. That's
Yeah.
that's fast. What's going on there?
Well, what's interesting is just how quick and how big this recovery seems to be. It's not just the overall profit. The report mentions a sharp jump in their operating profit margin in Q4 2025.
Right, from negative to positive.
Yeah, from negative 5.3% to plus 1.3%. That suggests something pretty fundamental changed in how they operate. And, seeing ordinary profit jump 6.8 times, that points to a really substantial improvement in their core business.
But, okay, we always need to look under the hood, right?
Always.
The report raises a flag about their gross profit margins. They've stayed relatively flat, even with those big sales increases. So for you listening, gross profit margin is basically the money left after the direct costs of what they sell. If that's not growing like sales are, well, it implies they're spending more to get each sale. Could hurt profits down the line.
That's a really critical point. I mean, more sales are great, obviously. But if the cost to get those sales or the direct cost of their gold or services isn't managed well, the whole profitability picture looks less solid.
Yeah.
It makes you question how scalable this growth is, how sustainable. And then there's their dependence on the gold market and, broader financial conditions. That adds volatility.
Speaking of gold, that brings us to the tailwind the report mentions. This booming gold investment market in Japan. Apparently, prices hit record highs.
Yeah, over 17,000 yen a gram back in April 2025.
And more people are signing up for monthly gold investments, up 26% year on year. You'd think that's pure upside for unbanked.
Oh, absolutely. I mean, connecting the dots, the surge in demand for gold in Japan has got to be a huge boost for their traditional gold trading side. But, like the report points out, that's market dependent.
Right.
If gold prices fall, or maybe the yen strengthens a lot,
Right.
that whole trend could just flip.
So weighing it all up on profitability and growth, it feels like impressive momentum, definitely. But there are these underlying questions about sort of operational efficiency and how much they lean on this hot, maybe volatile gold market. Growth seems to be the main focus. Maybe stability is the thing to watch.
I think that sums it up well. The V-shaped recovery is commendable, achieving profitability like that. But yeah, a closer look at cost structures, market sensitivity, that's crucial for understanding their real financial health.
Okay, let's pivot. Competitive landscape, technology they're using. The report says their main business, gold bullion trading, faces some pretty tough competition. Established players.
Yeah, names like Tanaka Kikinzoku Kogyo. It's not a space where it's easy to stand out on product alone or avoid price wars.
So not much of a moat there, maybe?
Not in the traditional sense, no. What is distinct, though, is their fintech play. Kinka Gold, or XNK, that's their cryptocurrency.
Right, the one linked to actual gold.
Exactly, linked to 1 ounce of LBMA standard Japanese gold bullion. And it's affiliated with the Cardano blockchain. For listeners maybe less familiar, blockchain offers things like, transparency, security for digital assets. Being a first mover with a gold token like this, well, that gives them something unique, at least for now.
Sounds innovative. But the report also kind of tempers expectations, right? Because Kinka's trading volume is still pretty small.
Yeah, around tens of millions of yen daily. So the concept is novel, yes, but it's not exactly driving huge revenue yet. They're still building market share, liquidity for it. It's early days.
Okay.
And the report mentions the wider group structure, Crowdbanking, as the parent. Kinka itself, based in BVI, a crowdfunding connection. There's potential for synergy there, maybe, but Crowdbank's direct financial contribution to unbanked seems indirect currently.
So the takeaway on competition and tech seems to be Novel crypto offering, potentially interesting.
Mm-hmm.
But their main market is still very competitive, and the fintech impact isn't fully proven yet in terms of market dominance.
That sounds like a fair assessment. The Kinka innovation is definitely a key differentiator, but its current scale, plus the intense competition in their core business, it means their overall competitive advantage in the broader financial world is, let's say, still developing. Moderate at best for now.
What about the people running the show? Management competence? We've got Tetsuya Adachi as president and CEO, Yoshitaka Okada as chairman. Both have been there a long time.
Long tenure, yes. And they've brought in outside directors, too, with diverse skills, including Christopher Richard Lane, mentioned as having blockchain expertise. Seems relevant for Kinka.
And the report does credit them with some decisive actions.
Definitely. Things like the name change to UNBANKED in July 2024, separating unprofitable subsidiaries that shows they can make bold moves.
Okay, but then there's the elephant in the room, the company's history. Accounting scandals.
Yes, that's crucial context. It inevitably raises questions about how thorough and effective the current governance reforms really are. It's something any potential investor would, frankly, need to watch like a hawk.
That history is a significant shadow, no doubt. On the flip side, you could argue a company surviving over 50 years must have some deep industry know-how.
True.
And embracing unbanked as a brand, moving into Web3, it does suggest they're willing to adapt, look forward.
It's that blend, isn't it? Experience, but also an openness to new tech. But those past scandals just mean you have to be cautious, really observe their governance and transparency going forward.
Adaptability seems to be a theme. The report actually rates them highly on adapting to market changes.
Yeah, they seem pretty agile.
Selling off parts of the business that weren't working, like Personal Capital, Daiwa, Premier Securities. Streamlining like that, responding quickly, that looks like a strength.
And launching UNB Gold in April 2025, right when gold prices were high. That's another example. Capitalizing on the market boom in their core area shows, strategic awareness.
And their crypto activity feels very deliberate. Launching Kinka in June 23. Then getting it listed on multiple Chinese exchanges like CoinW, Bitmart, MEXC fairly quickly.
Shows commitment to that space. Plus, the Cardano compatibility suggests they're thinking about the tech infrastructure.
So this proactive move, beyond just trading gold into blockchain and crowdfunding, it really highlights their ability to transform, doesn't it? The report sees that as a big plus in today's market.
Absolutely. Highly rated for swift adaptation, moving from traditional routes towards fintech, developing new businesses aligned with current trends. It's quite a shift.
Okay, let's talk financial stability. How solid is the ground beneath their feet? The report describes a pretty healthy capital structure.
It does. Roughly 7.39 billion yen in total assets, only 1.86 billion in total liabilities as of March 2025. And importantly, zero interest-bearing debt, plus an equity ratio over 70%.
That sounds very solid, generally speaking. A strong foundation.
Yeah, it suggests a robust financial base. They seem to have ample current assets, too, which gives them capacity for future investments. However, the report does add some cautions.
The but.
Right. Selling off subsidiaries could mean some one-time, potentially extraordinary losses. And the regulatory environment for crypto. That's always got some inherent risk and uncertainty.
And we have to circle back to the past scandals again, don't we?
We do. Even with a healthy balance sheet now, those events damaged credibility.
That could still linger, affecting investor confidence, even if it's not a direct number on the current financials.
Precisely. So current financial position looks sound, commendable even, but the history, the ongoing restructuring, it creates some uncertainty about their ability to generate strong cash flow consistently in the future.
Now, innovation. For a company moving into Web3, this has got to be key. The report highlights their GoldX blockchain idea with Kinka Gold, calls it pioneering.
Yeah, emphasizing it's a globally rare, 100% physical, gold-backed Japanese token. And the partnership with Cardano Mergo gives it a strong technical foundation.
And their innovation isn't just crypto, is it?
No. Like we mentioned, launching UNB Gold with smaller 100-gram trading units, that's about meeting customer needs in the traditional market.
Making it more accessible.
Exactly. And providing online gold investment education. That's about building an informed customer base.
Sophisticated R&D spending isn't broken out, but
You can infer it, right. Developing and running a crypto business needs investment. Engineers, security, it's not cheap. The whole shift towards fintech strongly implies an active investment in R&D.
so the assessment here is pretty positive.
Yes, Praiseworthy for actively exploring new fields beyond the traditional stuff. If these innovative projects, especially the gold token, really take off, that could be a major competitive advantage down the road.
What about their customers? Satisfaction, loyalty. Report mentions a big customer base, individual and corporate gold buyers. Over 150 tons cumulative volume. That's substantial.
Yeah, you'd assume a fair bit of repeat business there, especially with gold prices being high, creates a favorable environment. But detailed satisfaction data seems like it's not really available.
They are making efforts, though, right? Expanding trading units, the education piece.
hmm And those potential partnerships mentioned SBI Securities, Rakuten Securities that could really boost convenience and reach.
But again, the trust issue from the past scandals must play a role here, too.
Absolutely. The report stresses they need to rebuild trust through transparency. Maybe the Web3 stuff helps attract a new crowd, younger people perhaps.
But we don't have hard data on satisfaction levels right now.
Seems not. And no major complaints or lawsuits reported, which is good. But without concrete satisfaction indicators, the report gives a kind of moderate rating here. Shareholder perks like QUO cards are nice, but don't tell you much about core customer loyalty.
Okay, now the really tough one. Ethical business practices. The report is quite blunt about the past. Repeated fraudulent accounting, misappropriation of funds at the predecessor company.
Yeah, Daiichi Kabushiki Dusha led to being put on the stock exchange watch list. Damaged social credibility deeply, suggests maybe deep-rooted cultural issues back then.
A very serious negative factor.
Undeniably. Now, the report does note they've established compliance systems, internal reporting, a code of conduct on the website, indicating an effort to change, and no recent scandals found in the due diligence docs.
Which is positive. But rebuilding trust takes time.
Long time.
The new name Unbanked is framed interestingly, though, reflecting financial inclusion.
That seems to be the philosophy, yes. And tokenizing gold with transparency. You could argue that's about customer protection, regulatory compliance. But the crypto business itself brings ongoing ethical duties like anti-money laundering measures.
So the overall assessment on ethics is cautious, maybe even low.
The report leans towards low reliability, given the severity of the past problems. Current management's efforts are noted, but regaining trust is a long journey. The past weighs heavily here.
How about communicating with investors? IR report says they have Japanese and English IR websites. Regular updates, financials, reports, news.
Yeah, new services, shareholder benefits, like those QUO cards, seems standard.
And the quality of IR.
Seems okay. Representatives' photo and message and shareholder notices. Clear explanations of policy. Using QUO cards for voting rights suggests they want shareholders engaged.
But maybe not everything is public.
Right. Info on financial results briefings or individual IR meetings seems limited, publicly at least.
And their general profile in the market, media coverage.
Seems low. Not much market recognition compared to bigger firms. They have a corporate governance report, which provides accountability, but not much sign of proactive IR roadshows or broad market engagement.
So the verdict on IR is they cover the basics, but could do more.
Pretty much. Basic info is there, but PR and investor dialogue seem weak compared to larger companies. Room to improve disclosure and engagement.
Last key area. Securing and developing talent. People. Report says specifics like employee numbers, recruitment plans aren't public.
Makes it hard to judge. But logically, they need blockchain and security engineers for the crypto side, and their overseas entities might help with international recruitment.
What about training? Developing existing staff?
Well, you assume they have experienced people in metals, trading, and finance from their history, but Web3 skills for younger staff, training opportunities, unclear from the outside. They're apparently developing compliance training, implementing the company philosophy, appointing external advisors.
But can a smaller venture like Unbanked really compete for top talent against big finance and tech firms?
That's the challenge, isn't it? Compensation, career paths. It's tough for smaller players.
So without hard data, it's hard to say much definitively?
Exactly. Lack of specific personnel data makes it difficult. The business changes likely mean internal reorganization, training costs are going up. But how aggressive their overall talent strategy is, it's just not clear. The report seems quite neutral here.
Okay, let's pull it all together and look at the stock price outlook. Current price, late May 2025, around 274 yen. The report gives it a 30-40% chance of being a triple bagger. So, roughly 820 yen within 10 years.
Yeah, based on it being a small cap, so potentially volatile. Positive news flow possibility like profit jumps or project success, and this ongoing gold boom helping.
But limitations are noted too.
Right. Limited earnings base, strong competition, maybe tight share supply.
And a 10-bagger.
Sure.
10x return, so around 2,740 yen.
Much lower probability there, 5–10% chance within 10 years. That would require, well, Unbanked becoming a leading Japanese fintech, dominant share in gold trading and tokens, XNK needing widespread global adoption, sustaining 20–30% annual profit growth for a decade.
Sounds like a tall order.
A very tall order. Significant regulatory risks, external factors. The report even uses the term miraculous factor might be needed.
So the overall stock price outlook is, hopeful but cautious for 3x, very skeptical for 10x.
I think that captures it. Triple bagger needs significant improvement and maybe some market surprise. Reversing the current price decline is uncertain itself. Key factors are really, does the gold boom last, and do these new services actually succeed? So cautious hope for a triple, very low expectation for a 10-bagger.
Okay, so to summarize this whole deep dive, Unbanked is in this major transition, right? From traditional gold trading to trying to be a Web3 fintech player.
Exactly. You've got short-term potential support from high gold prices and buzz around new services, but set against that are significant risks. Those past scandals, being relatively small cap, the tough competitive environment.
So for you, the listener considering this, it requires a really careful weighing of risk versus potential reward.
Absolutely critical.
All right, that wraps up our deep dive on Unbanked. We've seen this fascinating evolution attempt merging tangible gold with cutting-edge crypto.
A very interesting mix.
But we've also really hit on the crucial things you need to keep front of mind. That legacy of past ethical issues.
Can't ignore it.
The intense competition in both their old and new markets, and just the inherent volatility of the assets they're dealing in.
Indeed. It's a story packed with potential, packed with ambition. But investors absolutely need clear eyes about both the opportunities and the very real challenges Unbanked is navigating.
And maybe here's a final thought for you to chew on. As UNBANKED makes this bold move, combining gold and blockchain, how might traditional assets themselves, be fundamentally reshaped by decentralized tech in the next decade? That could happen regardless whether this specific company, UNBANKED, ultimately succeeds or fails. It hints at a potentially very different future. Thanks for diving deep with us.